All right. So I'm Lindsay Labonte, branch manager here at our Harbor One Mortgage Applied Mortgage team. And usually I am joined by my good friend, Bob Petrelli, who's out in our Eastern Mass office. So you'll get to hear us both bantering back and forth. And we recently were discussing as a team how often we get the question about appraisal values and appraisal gaps right now in this market. And that oftentimes when our buyers are constructing their offers, sellers want to know, can they cover an appraisal gap? So presumably everybody who's listening, you're probably real estate industry professionals already, but if somebody's just catching this and they're a home buyer or a homeowner, Bob, you want to just like briefly, what does appraisal gap even really mean?
Well, I mean, the simple definitions, it's just the difference between what your contracted purchase price is and where the appraisal comes in. So sometimes the appraisal comes in higher. That's still an appraisal gap. It just doesn't change anything. So what people really want to know is what's the appraisal gap when the appraisal comes in under the purchase price. So that's the one that we're really focused on today. But just real quick, when it comes in higher, nothing changes. Because your loan to value is based off of the lower of your purchase price and the appraisal amount. So we base everything off of the purchase price because that's what everything's being geared towards. So when it comes in higher, no change. When it comes in under that, now your loan to value, if your down payment is staying the same from that purchase price, your loan to value goes up. So what does that mean for your transaction is really what we're going to get into today.
Awesome. Yeah. And I think the toughest part, most of our viewers are real estate agents, and you are all out there on the field, on the fly, trying to help your buyers put together the best offer they can. And then from the listing side, you're trying to review oftentimes multiple offer situations to figure out, which offer is really the best one to go with, or help your sellers understand that. And so first and foremost, I would just offer when these questions come up, just contact us directly because frankly, every buyer is going to be using a different loan program. Every lender may have different guidelines within their own loan programs. So unfortunately, no matter how many times we've talked about this as a team, I've talked with attorneys, I've talked with real estate professionals, there's not really just like a set formula to be sitting there and saying, okay, if this buyer offers X amount of dollars, can that appraisal come in low, right? That's really the question. If the appraisal comes in low, is the buyer still willing to proceed? So first and foremost, always call us. Even if it's not our customer, just call. We can happily answer any questions that you have and point in the right direction. But I think what Bobby was saying, a lot of people get confused because oftentimes they think the appraisal just has to come in at the loan amount. And that's not really the case because we're looking at what's called your total loan compared to the value of the house, not necessarily the purchase price. Although if the appraisal comes in higher, then it's the purchase price. But if the appraisal's lower, right, we're looking at that lower appraised value compared to whatever this loan amount is. So I see oftentimes that offers get written up and it says like buyer to pay $10,000 appraisal gap. But that can be confusing because, and I'm not an attorney, right? But like, what does that actually mean? So does it mean that the buyers will actually put 10,000 extra forward if the appraisal comes in low? Does it mean they're just still going to proceed as is if the appraisal comes in 10,000 under, right? I think sometimes attorneys get frustrated from what I've spoken with them about because it's not super clear. And yet buyers and sellers have to be able to translate this somehow when they're making their offer. Bobby, any other thoughts? I want to move on to some math and actual scenarios, but anything else?
I mean, just going back to like, we're not attorneys and we're not realtors, so we don't want
disclaimer,
to,
disclaimer.
yeah, exactly. I always find it's best to be specific. So if you're in a bidding war and you're offering, $500,000 for a house, then be specific about what that appraised value needs to come in at for you to proceed. So, if it's 450,000, say, as long as it's going to appraise for 450,000, buyer won't seek any price reduction.
Right.
So, when you're specific and you use an actual price, appraised value price, I think it takes a lot of the guesswork out of things later.
Mhm.
But as a realtor and a buyer, we should all be having a conversation, to determine what that amount is to be comfortable,
Right.
how's it going to change your loan terms? Like, what's your new payment going to be if it does come in less than that? You're going to have mortgage insurance where you didn't have it before, etc. So going back to what Lindsay said, it's always the conversation, but you want to be specific as well, like once you get to these contracts.
Totally. And I think what's happened is that appraisal gap term has become like such a trigger
Like a
term, right?
buzzword.
Yeah,
Yeah.
buzzword. Yeah, exactly. That it's like real estate agents and sellers and buyers and everybody are kind of conditioned to think they have to include it. And I'm not on, again, we're not on that end. We're not doing the contract. We're not doing anything. But from a lender side of the puzzle, that appraisal gap language doesn't always really make sense.
Yeah, and I think like most things, keeping it simple, because if you start putting language in there and the seller gets confused too, and they're not exactly sure what it means, like, but if you're specific and you dictate like, the exact amount that you're willing to have it go down to, then that takes all confusion out for everybody.
Exactly. And it's also based on the buyer's preference because, they may, like I had somebody who was offering 400,000 and they were putting 200,000 down. So their loan to value was only 50%, right? So even if that appraisal came in way, way, way below, and I should have my calculator to actually do the math, but like a lot under asking, it wasn't going to impact their loan terms at all. And yet the seller's side still wanted them to include appraisal gap language. They were like very adamant about having that language. And so they asked us to write up a little statement, which again, compliance probably wouldn't like that I do that. So whether or not I wrote it up. But anyway, they wanted us to just really explain what it would mean if the appraisal came in low. And at a 200,000 loan amount, right? To even maintain an 80% loan to value, which is kind of like sort of standard to not have to have PMI and everything, that $400,000 house could have actually appraised at 250 and they're borrowing 200 and they still would have been okay with that 80% loan to value threshold. Now, this was another interesting piece of the puzzle though, because so from from 400 down to 250, that's $150,000 difference. So the buyers didn't actually want to buy the house if it really came in $150,000 under value. So they then came up with kind of their own happy medium there. So there's a little bit of like, what can you do from the lending perspective versus, of course, what are you actually comfortable with, Bobby, which is what you basically were just saying. Want to do some math?
Love it.
Because I was just so good at doing it on the fly, which, hi, loan officer that needed to do some basic math. But I had this done up here because I wanted to just show like a really basic scenario, right? So what Bobby was talking about in the beginning, 500,000. When we start off, this is an example of 500,000 with 20% down. So we're starting off with the assumption that the house is going to appraise at or above whatever the purchase price is, right? 500, 500. They put their 20% down. Their loan to value is 80%. Their down payment's 20%. That's 100,000. They're borrowing 400, right? That's the assumption. If you like to see art, I did like a stick figure house before, but this is the best I could figure out in Excel. So that this is our little stick figure house here to represent that. So when we go into getting the appraisal done, let's say on this house, it actually came in at 450, right? What would happen at 450? So let's talk about that loan to value. If they wanted to keep that loan to value the same, and the house came in at 450, the loan amount, the loan to value is now based on that 450 because it's lower than the appraised value. So to keep their loan terms the same, to maintain that 80 loan to value, They would then need to put the difference between the 360 loan amount, which is 80% of the 450 appraised value. They'd have to put 140 down instead of 100. They would then be able to maintain their same loan terms. They don't need PMI. They can go ahead. That's one option. What I think is really interesting about this scenario, though, is how would that normally be written up, right, in the offer? They'd probably say a $50,000 appraisal gap. Thinking if the appraisal came in at 450, the buyers would still buy it. To a buyer, they're thinking then they have to pay 50,000 extra out of pocket. But really, they're only paying 40,000 extra out of pocket because they can finance that 80% loan to value. So it's based on a percentage of the difference of the appraised value. And that's where the math gets a little confusing, right? And actually calling the loan officer and figuring it out might be the best bet. So, Bobby, you were saying that you gave a good suggestion that you've seen some people do, which is like, instead of writing up 50,000 appraisal gap, how would it be written in that situation? Potentially.
Sure. If they, and so 450 was what they were willing for it to be, you write in the offer, as long as property appraises for at least 450,000, buyer won't seek any renegotiated terms. And that's just telling the seller that, yeah, I'm going to pay 500,000 for this house, but if for some reason it only appraises for 450, we're okay with that. And that's where it is. If it goes under 450, then we're going to come back and try to renegotiate, term.
And I think another important piece is that also leaves it open because there's a second possibility here, right? So if the house appraised at 450 instead of 500, and I was going to make you walk through this, Bobby, so we could have more back and forth, but you haven't seen these charts yet, so to not put you on the spot. So the second potential solution, a lot of people don't realize this, is that basically what was the problem with the appraisal coming in at 450? It changed the loan to value. If they wanted to still borrow 400, like in their original term here, but the appraised value was 450 instead of 500, that means their 400 loan compared to their now 450 house is an 89% loan to value. An 89% loan to value compared to an 80% loan to value triggers potentially changes in the loan terms, like needing to have private mortgage insurance. So what's cool is that the buyer actually has choices here. So they could do, which is what most people think of when they write those appraisal gaps, like I'm going to have to fork out an extra, in this case, $40,000. Or they could just say, no, we don't want to pay the extra money out of pocket. We're okay with having this $133 a month extra in mortgage insurance. We're okay with the higher payment. They could keep their down payment and their loan amount the same and just have a higher monthly payment instead. So that's again why, it's kind of like that idea of the appraisal gap, which has become, like Bobby said, a buzzword. It's not the whole story, I guess.
Yeah, it's definitely not. And I'm saying, like, to keep it simple with, like, you're not going to renegotiate, unless it appraises for less than 450. You could still get pushback on that because, some people might say, oh, well, it only appraised for 440. Now you could renegotiate everything, right? Like the whole terms of it, and try to get it down to that amount. So it can get more confusing than that, depending upon how, detailed you want to get. But at least I would write up the initial offer that way and keep it simple. And then if you get pushback, then, figure out the math, because it can get real confusing as far as, like,
Right.
Willing to pay X number of dollars over appraisal and all that. So, it's not a simple scenario, but it's all the more reason why we need to talk
Right.
about it.
And oftentimes, because we get this question so much, this is oftentimes one of the deciding factors in whether somebody's offer comes together or not. And so I think that's another thing, is like, people are potentially leaving maybe not leaving money on the table, but not putting their best foot forward because they don't fully understand that they actually can include this idea of an appraisal gap, right? Like sometimes that's the conversation. They're like, well, no, I don't want to have to pay extra money out of pocket. I don't want to have an appraisal gap. Well, they might not actually have to pay extra money out of pocket. It might be a monthly payment thing, and maybe they're comfortable with that. And maybe offering that extra $10,000 appraisal gap, which really isn't out of pocket, makes the deal. So these are routine conversations that we're having with our customers when we do their mortgage consultation and when we get them pre-approved. And I think that education side of the puzzle is really just another thing that sets our pre-approval process apart from other banks and lenders, based on what customers have told us and what realtors and attorneys tell us with feedback all the time. So there's definitely tons more scenarios that we could come up with and we could go over, but I think just to keep it really basic here, that loan to value is the important piece of the puzzle. And then also, again, it completely depends on the customer's situation. So like some programs, you can go all the way up to 95 loan to value or even 100 loan to value. But other programs you can't go above 75 or you can't go above 80. So really, again, it just comes back to making sure that the buyer has had this conversation with their loan officer. And maybe if you're the real estate agent or you're the attorney involved, everyone talks together to get on the same page, and then they can really put their best foot forward on the offer. Anything else to add, Bob?
No, I would just agree with you that it can be a competitive advantage if you're willing to include one in your offer, even if it's a property that you're not even concerned about the appraisal coming in. I mean, all the better at that point, I guess, to include one because it's like a low risk, but there's always a risk if you include it in, because if anything you include in, you need to be willing to do, and you need to know, what those things are. But, in a purchase situation, an appraiser is trying to justify the purchase price. They have the purchase and sales, and their job at that point in time is really to justify the purchase price, because the market value of a home is truly what somebody's willing to pay for it. So, by definition, just by you willing to pay for that, that is the market value of the home. But, we can't just take that as gospel. So we need to have an appraiser go out and justify that. And that's their job. And sometimes they can't justify it. But, most of the time they can. But sometimes it comes up that they can't. So that's why you need to know, about appraisal gaps and what they mean and how it can be a competitive advantage for you including them.
Awesome. And not to jinx things, I should probably knock on wood like all over the house, but that's another big question we get is like, are appraisals coming in low? I don't see appraisals really coming in low. I probably just fully jinxed myself to the whole universe, but I think that it's also sort of a worry that isn't always necessary. Of course, it's brought on by the fact that people are offering so much above asking price. But the thing is, this market has been that way now. First of all, for the last decade, right? It's been more of a seller's market, but secondly, especially in the last few years. So all of the cash sales that are happening, all of the above asking, transactions that are already going through, like Bobby said, appraisers have those to draw from. So it's not like out of the blue, someone's offering 100,000 above asking price, right? This is something that's happening.
Right. And the list price means nothing for market value. I mean, you as realtors know you always price things under what you're expecting to get because you want to drive interest and drive the bidding wars, which is why so many people are making offers over asking. And also I did just have one come in low last month on appraisal for what it's worth. It wasn't much and it didn't, everything was fine with it. But it did. It was a condo. Those are a little bit easier to come in lower, I think, because, there's a single family home obviously they're so different from one another, just from whether it's location or size or layout and stuff. And condos, obviously there's more cookie cutterness to them in a lot of cases.
Yeah. Yeah. So anyway, let's put good vibes out for everybody's appraised values. But nonetheless, if they're coming in low, y'all know how to do appraisal gap coverage now, or whatever we want to call it, the buzzword.
Yeah.
So would love feedback on this little webinar. We try to keep them quick, usually shorter than this, but this was a good topic, fun to talk about. Anything else that anyone wants us to discuss, please let us know. We are doing all of these webinars for you based on feedback for educational purposes and collaboration. We all want to be on the same page, so we're all working together to talk to our buyers and each other, coming from the same side of the table. Our next webinars that we have coming up would be, let's see, June 6th. We are reviewing our underwriting process, including our fully underwritten pre-approval, which really gives buyers a boost. We're also going to have a webinar on June 12th for our home run cash offer program. Again, another service that can give people a boost when they're out making offers, will actually back their offer cash. And lastly, at the end of June, there are some big changes that came to the way that condo insurance deductibles are looked at by the agencies. So we will be talking all about condos, the condo review process, and what is going on with those insurance deductibles. And I think I might have even finagled an underwriter to come on the call with me to actually be the voice of reason. So that'll be better. We won't have to do as many disclaimers that we are, just chatting. Thanks for being here, Bobby. Thanks for everyone who watched, and stay tuned. Subscribe to our YouTube, give us a like, register for the future webinars, and we look forward to chatting more.
Thanks a lot.